This is the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial endowment expert, Harold Siegel. We're taping the show on August 16th, 2013. Our time is 8:40. We're on your favorite radio stations live. We're also archived on Harold's websites, rarecoloreddiamonds.com and HESradio.com. We have a podcast through iTunes. Go to iTunes, type in World Financial Report on Radio. You can listen to our radio show on your portable device, iPhone, iPad, iPod, and Harold does daily market commentary on his websites. You can find it on the podcast site as well. Just a note, as we start today's show, don't forget, Worldwide Precious Metals, the company Harold recommends you use when it comes to investing in gold, silver, platinum, palladium, going to be in Toronto in October. To book a private information session with them, call 1-866-623-2002. That's 1-866-623-2002, or sign up online at wwpmc.com. And don't forget, Harold's website, hsfineauctions.com. The next auction is coming up October 21st, 8 Eastern, 6 Mountain. You can sign up for that today at hsfineauctions.com. As we tape today's show, obviously, a lot of geopolitical turmoil in Egypt, and that is obviously ongoing and fluid. Food stamp use in the United States, 47.6 million people, 1 in 6 Americans using food stamps. Japan's debt passed 1 quadrillion, if you can believe this, 1 trillion quadrillion yen. That's roughly 10 trillion. 247% of GDP. How is that sustainable? Time will tell. That's why people are moving into hard assets. U.S. budget deficit for July, negative $98 billion. They were in the hole. The U.S. debt still stands at $16.69 trillion as they manipulate things as they get to the end of September, and then they will have to raise the debt ceiling, and there will be one heck of a fight in the U.S. Congress. In California, teen unemployment, 33%. In Greece, 65%. You also have 37% of adults under age 35 own a home. That is a 12% drop from 5 years ago. And Harold, gold and silver had very strong weeks. In fact, from the bottom, silver is now up over 20%. Bloomberg saying that silver is now back in a bull market. But a very interesting week with what was happening in Egypt, and we're seeing that reflected in gas prices in Alberta. We're seeing it obviously in oil prices and precious metals jumping up as well as the seasonality and technicals start to improve.
You bet, Randy. All in all, it was a very good week, especially for August, with August being such a slow month. Obviously, so many people are on vacation. You know, the crazy thing is, we have work ethic. If business is tough or whatever, I know in my business that we don't take vacation. If things are down or whatever, or busy, we just don't take vacations. But in Europe, even in Greece, which is obviously in shambles financially with 65% unemployment amongst the college kids, that's a lost generation, and then 30% among working adults. Those are depression-type numbers, and still they're taking a month off for vacation. To me, it doesn't make any sense whatsoever, but that's probably why they're in the situation that they are. Anyways, it was a very good week. As we're taping the show, the markets are lightly traded on Friday. A lot of traders go away for the weekend, especially up in New York. Gold is down $1.20, but we've had a huge week. We had 2 days in particular this week that gold was up over $25, $30. So gold is trading right now at $1365.90. $1365.90. So what we have had is 2 days in a row that we've seen a close above the 1350 level, which is extremely important. That doesn't put us into a bullish territory as far as I'm concerned, but it is certainly a good start. Same scenario with silver. Silver's up a penny. We're at $23.12. Don't forget, we were at $18 in silver not that long ago. But again, silver and gold have got to go through certain areas in which resistance areas in which to go higher. And again, as far as my numbers go, for me to say that gold has now turned the corner and is now in a very bullish stance, we really need to see gold back up into the 1600 range. So basically at this point, 2 closes above 1350 is very bullish in my terms. And again, as long as the market keeps moving forward in that sense, there's still no doubt in my mind and many others that gold and silver are two of the major commodities that are going to make substantially higher moves. And again, with everything that Randy talked about at the beginning of the show and what's in the newsletter this week, it's almost impossible in my mind that gold and silver will not come back, make new highs, and hit numbers that we've talked about 3, 4, 5 years ago, anywhere from $3,500 to $5,000 gold. I just don't see how in the world that we're not going to hit numbers of that magnitude. And as far as silver goes, I think that we're going to see silver in the triple digits. There's shortages in those markets. A lot of people that were in the market do not believe that gold and silver are in a bear market, and they feel that it was forced down by the Federal Reserve and by the government. And as much as I hate to say so, I don't see any way that, that's not true. So the fact is that back in 2011, when gold hit $1,920 and silver hit $50, we were on our way to much higher numbers for very good reasons. Everything fundamentally and technically in the market were sound. And then all of a sudden, the exchanges decided to raise the margin requirements, and they forced the price of gold and silver down. Then the hedge funds sold out. Then the ETFs sold out, and all of a sudden everybody got negative on gold and silver when really nothing changed fundamentally in the market. In actual fact, in my opinion, and many others, fundamentally the market is stronger today than it was back in 2011. So you've got scenarios going on, and again, we talk about this every week, that the governments are so desperate right now that they're doing things out of desperation. You can't believe a lot of the numbers that are coming out of the government at this point. For example, the unemployment numbers in the United States. They're not 7.5%. There's no way in the world that there is 7.5% unemployment in the United States amongst adults. It's more like 13%. And that's a fairly accurate number. Then on top of that, look at the kids coming out of college. It's probably in the range of about 30 to 35%. In Europe, you've got 30% unemployment amongst adults, and then you've got 65% amongst college kids. So that leads, if this continues, and I don't see what the solution of it is going to be, because there's no money coming into those countries. When companies are going bankrupt, they're not paying taxes. When people aren't working, they're not paying taxes. So how are things going to get better? And what we will see is like a lost generation. We'll see these poor kids coming out of college, and they've got all their hopes and dreams, and they're looking forward to getting out of college and getting into business and starting a life for themselves, and that's just not going to happen. In fact, in most cases right now, kids coming out of college are living with their parents. They can't afford a home, they can't get a job, and this could be an entire lost generation and really obviously hurt the economy tremendously. So be very, very cautious with what's happening in the market. You've also seen this week major drawdowns in the Dow Jones. The Dow is down to 15,133. We saw a 230-point drop on Thursday, and then we saw another heavy drop during the week also. We're very bearish on the stock market. Again, we feel that the only reason that the Dow has been up is primarily because of quantitative easing, that the Federal Reserve is putting $85 billion a month into the market, and that's what's held the market up. In actual fact, if you take away that $85 billion a month, we're probably looking at the Dow in around the 55 to 5,600 range. So that's what's going to happen, and we saw a brief indication of that a couple months ago when Bernanke came out and said that they're thinking of tapering off quantitative easing, and the stock market dropped 550 points in 2 days. If that doesn't give you an indication as to how sensitive this market is to comments and other situations like that, again, it is not a safe place to have your money. The Dow could easily fall back down to 8,000. The NASDAQ is trading right now at 3,600. It's actually been a little bit stronger than the Dow, but again, I'm not very bullish on the stock markets at all at this point because, again, the economy is not what is pushing up the Dow. It's the quantitative easing. It has nothing to do with what's happening in the economy. You've also got the U.S. dollar dropping. The U.S. dollar is at 81.19. The U.S. dollar, as soon as it gets to the 80-cent level, that's the heaviest support level for the U.S. dollar at this point. If it does break 80 cents, back in 2011 when gold hit $1,920, the U.S. dollar was at 72.5 cents. And that's where it's going again. That's one of the reasons that we believe that gold is going to take out its old highs. But we also believe that once we break that 72.50 level in the U.S. dollar, that it's going to free fall down to the 50-cent level. And that's why we feel the gold's going to be at 3,500 to 5,000. At this particular point, the government is saying that there's no inflation. However, oil's at $107 right now, $108 right now. So, again, the way that the government calculates inflation is not, in my opinion and many others, the true way to calculate it. Because the bottom line is that if you're making $100,000 a year and you're paying your taxes on that, you're paying your 30-40% taxes, then on top of that, you're paying your mortgage and your cars and your food and your insurance and everything else, whatever is left over is savings. The bottom line is that if oil's at $108 and it's costing you that much more to heat your home and drive your car, there's no way in the world that we don't have inflation probably sitting at 6 or 7% right now instead of the 1.5 or 2% that the government is saying that we have. So, again, at this point here, one of the reasons for the newsletter every week and the radio show is to give you the information that you need to make an intelligent business decision. If you go by what you see on television, you're going to be like 90% of the rest of the people out there, and you're going to lose your money. At this particular point, with everything happening in the world, with Europe going under, with the United States not moving forward, with Japan in huge trouble, geopolitical situations all throughout the Middle East and Egypt and everything like that, it is not a time to be speculating in the market. It's a time to be extremely conservative, not take unnecessary risks, and make sure you have all your ducks in a row. Own some physical gold and silver. Don't be trading it in the futures markets and leveraging it and trying to time it, because 90% of the people that trade the futures market lose their money. What you want to do is you want to be very, very conservative. You want to own everything. You want to own your physical gold and silver. You want to own your diamonds. You want to keep some cash on hand, but not, a lot in the banks. You never keep in the bank more than $125,000, because that's what your insurance on your bank account will give you in Canada. $125,000. If you keep $500,000 in the bank and that bank goes under, you're going to lose everything but $125,000. And the exact same thing happened in Cyprus. We all know that. We've talked about it every week. And when all the dust settled, the depositors lost 49% of their deposits. And all that for a 1 or 2% return by keeping your money in the bank, it makes absolutely no sense. So, again, I'm totally committed to gold and silver. I am not somebody who deals in emotion. I deal in logic. And again, I've been in this business 35 years. There is no doubt in my mind where this market is going to. There's no doubt in my mind how bad the economy is, not only in the United States, but worldwide. And every bank deals with each other. Every country deals with each other. And everybody's in financial trouble. And when you've got $17 trillion worth of debt in the United States, $10 trillion worth of debt in Japan, and similar going on in Europe, there's not enough money in the world to bail these places out. So again, it's a time to be smart about this. 90% of the money is made by 10% of the people. The reason we do this radio show every single week is because we want our clients and listeners to this radio show to be in that 10%. We want to get through this. We want to keep our dollars. We don't want to speculate in the market, but we also want to own the type of assets that are going to increase as inflation increases and as these monetary situations get worse. You need to be in physical gold, physical silver, and diamonds, and those are the three avenues that are going to get you through these extremely difficult times.
Worldwide Precious Metals, Vancouver, British Columbia, leading Canadian precious metals bullion dealer, recommended by Harold Siegel for over 10 years. They are the people that Harold recommends you use, the experts to trust and work with in this very specialized market: gold, silver, platinum, palladium. They're going to be in Toronto in October. To book a private information session, call 1-866-623-2002. That's 1-866-623-2002. And if you're interested in receiving our free weekly newsletter, learn more about starting your own precious metals investment account, 1-866-623-2002 or www.pmc.com. Start your own precious metals investment account today. All gold is allocated either wholesale or premium, and Worldwide Precious Metals is there to help you maximize profit, minimize risk. You have instant liquidity in and out of the market with just a phone call, 24/7 online access. The metal can be stored on your behalf, insured to the full value of your investment, and you can ask about domestic or foreign storage and premium storage in specific coin and bar form. stored metal is outside the banking system. Keep that in mind. The metal can be delivered to your door. Worldwide Precious Metals has worldwide access to the physical bullion you want and need today. We're hearing about wait times and delivery delays. Speak with Worldwide. They'll get that precious metals into your hands. 1-866-623-2002, WWPMC.com. In our newsletter, lots of good information this week about silver. Silver updates from James Turk, and he says, silver is adding more fuel to the fire. Note how it finally outperforms gold. So the gold-silver ratio has started falling once again, which is yet another piece of the evidence that both precious metals have made an important low. This is another indication that the metals have begun a new upleg in this major multi-year bull market. And given the unprecedented backwardization in gold, investors should expect this upleg in gold and silver to be spectacular, meaning this move will be more remarkable than any gold or silver has ever seen over the past 13 years. The gold-to-silver ratio was approximately 67-1, and here we are today, right around 59-60-1. So we've seen great improvement in a very short period of time as silver is on fire. John Embry, Silver Market Update, said, today, I'm absolutely baffled as to where the physical silver has come from to meet the massive demand. The latest sizable increase in demand has come from India. When you superimpose that on what is still very firm industrial and investment demand for silver elsewhere in the world, it's remarkable the central planners were able to drive the price as low as they did. So when the prices of silver do turn, which we're already seeing, it's going to turn with a vengeance. No matter how bullish I am on gold, I am way more bullish on silver. In our newsletter as well, we have updates from Stephen Lieb. He updates us on silver. Dan Norsini, Tom Fitzpatrick, Clive Mond, Adam Hamilton, and really, when it comes to silver, the godfather of silver, that is Ted Butler. You can read those articles in our newsletter. Also in the newsletter this week, Greg Hunter, formerly of CNN, he interviewed Robert Kiyosaki, who is well known for the Rich Dad, Poor Dad books, and he talked about Detroit. He says, I'm terrified for my fellow human beings. Detroit just declared bankruptcy, and most Americans have no idea what that means. The idea that Detroit went bankrupt is the canary in the coal mine. It means the end of the industrial age. Kiyosaki, who wrote the best, actually, I guess it would be the self-help book, and he says, America is Detroit. And he says, our leaders are functionally incompetent because they are still operating with industrial age ideas. The rich are getting richer than ever before, but the middle class is shrinking. Both Obama and Romney promised to save them, and when politicians promise to save your butt, you know your butt is gone. Kiyosaki goes on to say, if you trust Obama or the Republicans or the Democrats, then you don't need to buy gold. But I don't trust them. I don't trust Bernanke. I don't trust the financial system, but I do trust gold. So he says it's not in God I trust, as in the United States, obviously they have on their currency, but it's in gold I trust. And Robert Kiyosaki, as we said, Harold famous for his Rich Dad, Poor Dad books, and I agree with him. I think Detroit is really just a microcosm of the larger picture of what's happening in the United States, and come the end of September, they have that debt ceiling stuck just below because they're able to do magic tricks with their balance sheet to keep everything, the money flowing. But eventually, at the end of September, there is going to be one heck of a battle to raise that debt ceiling, and it could cause fireworks to the United States and their economy.
It is crazy, Randy. It is absolutely frightening to think what is being done, in most cases behind our back, because the government doesn't really tell you what's going on and how they're screwing things up. So, again, it just goes back to what I said at the beginning of the show. It's time to be extremely conservative and get yourself into the type of assets that are going to protect you against, again, the onslaught of what's coming. And again, when you owe as much money as the U.S. owes and all the other countries owe, it eventually comes time to pay the piper. And the piper is China. And not that China is in great shape financially either. Their real estate market is in worse shape than the United States was back in 2008. They've got entire cities that are totally vacant. So, again, there was a lot of money spent, a lot of money printed, a lot of money borrowed, and now it can't be paid back because these countries have no revenue coming in. It's like anything else. If you look at your own business, that if you borrowed so much money and you've got no money coming in, eventually your company is going to go bankrupt. And then you start getting the phone calls from the debt collectors and everything like that. The only difference between you and us and the United States government is that they can go and print money. But the ramifications of printing money, they're going to have to deal with eventually. And the ramifications of printing as much money as dollars as they've done, number one, will lead to an extremely weak dollar, and number two, will lead to the real reason why we got involved in gold and silver 13 years ago in the first place, which is massive inflation. Because what is going to follow what's happening right now has got to be massive inflation because, again, you've destroyed the buying power of the dollar and you've got oil prices and food substantially higher. So, again, I believe a lot in what Kawasaki said, and one of the most horrible situations that has happened is that one of the great cities in all of the United States has gone bankrupt, and they're not going to be the only one. There are other cities and states within the United States that are in just as bad a shape, and Illinois is one of them. So I've got a very strong feeling, the way the markets are feeling at this particular point, is that 2014 is going to be a very rough year. In actual fact, October, we could start to see major sell-offs in the Dow Jones. So if you're sitting very heavy in paper, meaning paper cash, paper stocks, paper investments, you want to get out of those. You want to start to liquidate those and free up some of the risk you have. And all you have to do is remember 2008 when the Dow Jones went from 14,000 to 6,500 and almost everybody got wiped out. I'm 59 years old. Most of my clients at this particular point are around the same ages, and it's not like being in the 90s when you could have made a fortune in real estate and stocks. Those days are all gone now. You've got to change the way that you think and take some of the risk off the table and get yourself into the type of assets that are going to protect you against a weak U.S. dollar, a weaker Canadian dollar, and extremely high inflation, possibly hyperinflation, as a result of all this money being printed.
Bank of Cyprus depositors, as we reported a few weeks ago, they lost 47.5% of their savings. And that was people over $100,000. And this is having a crippling effect on Cyprians. Don't let this happen to you. Get some money out of the banking system into hard assets like gold and silver. Stop the destruction of your paper wealth by investing in hard assets, gold, silver, platinum, palladium. Turn paper assets into hard assets for real wealth. As the events in the financial and geopolitical world change daily, as we see when we watch Bloomberg and television news, whether it be CTV or CBC or Global, we see the world changing in front of us, and we need to obviously have that insurance policy in our portfolio, gold and silver, to profit and protect the wealth that we have. The company that Harold recommends you use, Worldwide Precious Metals, connect with them at 1-866-623-2002. Their website is wwpmc.com. Get our free weekly newsletter from them. They'll be happy to send it out to you via email free of charge. They're going to be in Toronto this October. To book a private information session with them, give them a call at 1-866-623-2002 or sign up online, wwpmc.com. It was interesting. Eric Sprott was interviewed during the week, and he said that he really still believes that we're going to see $2,400 gold in a year. I firmly believe we have reached the bottom on June 28th, and that gold should double from the bottom within the next 12 months. So by next summer, I think that the price of gold will have made new highs and stand around $2,400 an ounce. And let's just talk about that for 1 second when you take into account the gold to silver ratio. So if Eric Sprott is right, and we'll use a figure of $2,500, at 60 to 1, that would give us a silver price of $41.67. If the gold to silver ratio stayed exactly where it is today, 60 to 1, $2,500 gold, silver price of $41.67. Now, if the ratio was improving 50 to 1, $2,500 gold, that would give us $50 silver, 40 to 1, $62.50, 30 to 1, $83.33, 20 to 1, 125, and 15 to 1, 166.67. But you can see even on the conservative side of 50 to 1, $2,500 gold would give us $50 silver, and from where we are today, around $23. Harold, you're looking at, and we have about a minute left here, you're looking at a double.
You bet. Now, in 1980, when gold and silver hit their highs, it was a 16 to 1 ratio, gold more expensive than silver. Where would that put silver at a 15, 16 to 1 ratio if gold was at 2,500?
It would put us at 166, so you can see a huge move, 166.
Exactly. That would be triple the highs that we saw in 1980 and in 2011. And again, that makes sense to me. And with the shortage in silver, the fact that there's very little of it available, again, silver could absolutely skyrocket. And again, still a firm believer, have not sold any of my physical gold and silver. I'm still a firm believer in that market.
Worldwide Precious Metals in Toronto in October. To book a private information session with them, 1-866-623-2002, the website www.pmc.com. Going to come back and talk about diamonds. As the World Financial Report on Radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping the show on August 16th, 2013. Our time is 9:07. Radio show runs on your favorite radio stations. Also, the show's archived online on Harold's websites, rarecoloreddiamonds.com and HESradio.com. We have a podcast. The podcast is through iTunes. Type in World Financial Report on Radio. You can find us there. We are portable. We go where you are with your iPad, your iPod, your iPhone. Should mention as well, Harold does daily market commentary on his websites. You can find it on the podcast site as well. The company Harold recommends you use when it comes to investing in gold, silver, platinum, palladium, Worldwide Precious Metals, going to be in Toronto in October. To book a private information session with them, call 1-866-623-2002, or you can sign up online, www.pmc.com. Worldwide Precious Metals, a leading Canadian precious metals bullion dealer, recommended by Harold for over 10 years. They are the experts to trust and work with in this very specialized market. You can get our free weekly newsletter from them and learn more. They're the experts. Talk to them. Let them earn your business when it comes to the precious metals markets. Harold's website is rarecoloreddiamonds.com, recently featured on Bloomberg, recently updated as well. It looks absolutely spectacular. Rarecoloreddiamonds.com, our featured diamond of the week, and this is a big one for a pink argyle. Normally they're not this big. It is a beauty. A .90 carat emerald cut fancy intense pink argyle. And on Harold's website, not only can you see pictures, but you can see video of the diamond, which is absolutely stunning. In our newsletter this week, we did put on again and you can see it on Harold's website, rarecoloreddiamonds.com, the interview Harold did with Deirdre. And here in Canada, we would call her Deirdre. In the United States, what do they call her, Harold? Deirdre, I think. Yeah, Deirdre. We're here in Canada and Britain. We would say Deirdre. They're in the United States. They say Deirdre. So Deirdre Bolton interviewed Harold on Bloomberg. We have that video we can share with you on Harold's site, and we have it in the newsletter as well. And Harold, we should let everyone know we have an auction coming up, hsfineauctions.com, October 21st, 8 Eastern, 6 Mountain. They have already confirmed with you that Deirdre Bolton, she likes having diamonds around her neck and interviewing Harold Siegel, because you're going back on very, very soon.
We'll be on October the 18th, just before the auction, and it's going to be a huge auction. We're going to have some amazing, amazing pieces. And it's all exciting, again, to get that type of notoriety. But it just goes to show you that diamonds right now are such a huge topic that we are inundated with interviews from all over the world. So basically, when we hold a seminar, an online seminar, it's not unusual for 300 or 400 people to attend, and they could be from China, they could be from Australia, from Europe, from all over the world. So again, we try to educate you and give you the information you need to make the right decision. Now, why would you be interested in investing in diamonds? First of all, not all diamonds are investment quality diamonds. In fact, the majority aren't. There are very few diamonds that really fall into the category of investment quality. And when most people would think about investing in a diamond, you would think that you would have to buy a diamond in the multi-million-dollar range in order to be able to make money with it, number one, for it to be rare enough to resell at maybe Christie's or Sotheby's, but that isn't the case. In actual fact, there are several diamonds that are very strong investments that have track records for many, many years, for many decades, and go up no matter what the economy is. I'm going to give you 3 different classifications of diamonds, and you do not have to spend millions and millions of dollars in which to get into the diamond market. In fact, with my company, we have investment quality diamonds starting at $15,000 and going all the way up into the $40 to $50 million range. The majority of our clients are just hard-working, everyday people that are sick and tired of putting their money in the bank, getting 1 or 2% return when inflation is much more than that, and you know that the banks are not safe. And by getting such a small return by putting your money into the bank, unfortunately what it's forcing people to do to get any type of return is forcing them back into the very risky and volatile stock market, which we do not recommend in any way, shape, or form. We recommend gold and silver physically, and we recommend certain diamonds. I'm going to give you 3 different classifications. Let's start with the featured diamond. It's a pink diamond from the Argyle mine. For those that know what the Argyle mine is, it's a diamond mine in Western Australia that was actually discovered in 1986. It is the largest producing diamond mine in the world, producing over 30 million carats of diamonds a year. The majority of those 30 million carats are lower grade industrial white diamonds that are used to cut other diamonds. However, what the Argyle mine is famous for is producing 95% of the pink diamonds in the world. And these pink diamonds are the most concentrated form of wealth that there is. The majority of these diamonds are under a quarter carat, 95% of them. So to get one that's around a carat is extremely rare. To get one that's an emerald cut is even more rare, and that's what the featured diamond is. It's a 90 point, so it's almost a full carat. It's an emerald cut. It's a long emerald cut, which is one of my favorite cuts. It's a fancy, intense pink, which is one of the best colors you can get, and it is a diamond from the Argyle mine with all the documents, and it's a signed piece. Now, these diamonds go up by about 15 to 20% a year. So every year, these diamonds go up in value because there's so few of them, and they're so sought after because in jewelry, they're amongst the most beautiful diamonds that you could ever own. Why are these a great investment? Well, number one, by going up 15 to 20% a year, and they never decline in value because there's so few of them, it makes for a great investment. Diamonds are a longer-term investment. You don't buy a diamond today and sell it a year from now. It's not that type of investment. You want to put it away for retirement. You want to put it away for your to make money for the next 8 to 10 years. Now, why is an Argyle pink diamond such a great investment? Because the Argyle mine is getting ready to close down. They've been in operation since 1986, as I mentioned. The mine is pretty well exhausted. They're not making any money anymore, and the mine is supposed to close, according to the owners, by 2018, which is only 5-6 years from now. So if you bought an Argyle pink diamond today, you put it away in your safety deposit box for your future, or you put it into a beautiful ring or necklace and let your wife wear it. The beautiful thing is, in 10 years, these diamonds can be anywhere from 5 to 10 times what the prices are today. There's not going to be any more pink diamonds. The mine is definitely closing. They've come out and said so. So if you're one of the fortunate few to own one of these amazing pink Argyle diamonds, the returns will be substantial. They could be 5 to 10 times the prices that you're buying them at today, meaning that if you got involved in an Argyle pink for $50,000, in 10 years from now, that diamond could be worth anywhere from $250,000 to $500,000. Now, I bought a Argyle pink diamond, 2-carat vivid pink, back in 2003. That was 10 years ago. I paid $350,000 for the diamond, and now the diamond's worth close to $4 million. I've been out for dinner with my wife's girlfriend and my wife. She was wearing a 5-carat pink diamond ring. I asked her about it, and she told me that her grandmother bought it 50 years ago for about $35,000. That diamond today is now worth about $5 million. So that's what's happening in the diamond market. You want to own these diamonds because, number one, they're portable private wealth. Nobody knows that you own them. You can do anything with them. If you own it, you can go to another country with it. We could sell these diamonds for you anywhere in Europe for stronger currencies, We could sell it in Canada and the United States as we own our own auction business. We're the only company that has created the secondary market to resell our clients' diamonds. So these Argyle pink diamonds are amongst the best investments you could possibly make. They never, ever decline in value, so you have something that is going to always hold its value. And the fact that the mine is going to close, and this mine produces 95% of the world's pink diamonds, it means just on the supply and demand situation where the demand for these diamonds is so high and the supplies are so small that, again, the prices just go up at least 15 to 20% a year. And when the mine closes, we anticipate our clients hitting a home run with these. You want to own one of these magnificent Argyle pinks. They start at about $25,000 and they go up in price from there. And again, if you look on our website, rarecoloreddiamonds.com, you go to the loose diamond section and look at our pink diamonds, you will see more Argyle pink diamonds than any dealer in the world has. I've invested so much money with Argyle because it's one of the best investments you could make and one of the safest investments you could make. So number one, we recommend these Argyle pinks very, very heavily. It's definitely a home run. The other diamonds that we recommend are yellow flawless diamonds. Now, they have to be internally flawless diamonds because if they're flawed, they do not go up anywhere near as a perfect yellow diamond. Back in 1980, you could have bought a 1-carat yellow flawless diamond for $500. Today, they're $20,000, if you could even get one. They're amongst the best investments you could make. They're very conservative. They increase by about 15% a year, meaning that if you buy a yellow flawless diamond today, or whatever, you put it away for the next 10 years, that diamond will be worth about $80,000. You pay $20 for it. You're going to make about a 400% return on your invested dollar. You tell me any other investment that can give you that type of return with the safety that you have in the diamond market. These diamonds are extremely safe. They never, ever go down in value because there's so few of them. Yellow flawless diamonds, there's maybe 100 of them cut for the entire world. And these are the diamonds that we've offered to our clients for decades now. And again, these diamonds are so safe and so profitable that I've got 3 young grandchildren, and they all have yellow flawless and Argyle pink diamonds put away for their future. They're 9, 6, and 1. Again, by the time they get started in this tough world, I want to make sure that they have an asset that's worth something. Also, for those of us that would like to retire one day. You know, I'm 59, going to be 60 in October. If you're in your 40s, 50s, 60s, or 70s and you've put nothing away for retirement, if you put your money into the stock market, the chances are excellent you're going to lose your money. Put your money into a rare colored diamond and put it away for 10 years and see the returns that you're going to get, because, again, these diamonds never, ever decline because there's hardly any of them available. So we've covered the Argyle pinks. Amongst the best investment diamonds you could buy, and the mine that produces them is going to close. We've covered the yellow flawless diamonds. They go up by about 15% a year. A $20,000 yellow flawless diamond in 10 years from now will be worth about $80,000. If you put $20,000 into the stock market, you won't get back anywhere close to $80,000 that you would get back on your yellow flawless. And the other diamonds that I want to talk to you about are not colored diamonds, they're colorless diamonds. They're D-flawless whites. A D color means that it's colorless. Flawless is the highest clarity grade that you can get, and the diamonds that we cut, these triple excellence, represent 0.001% of the market. They are the rarest white diamonds in the world. They're 10 times the value of a normal white diamond, and again, they're almost impossible to get. These go to very, very, very high-end jewelers who sell them for 2, 3, 4 times what we sell them for. We're not jewelers, we're investment brokers in diamonds. So a D-flawless white diamond that you could buy today for, let's say, a 1-carat diamond for under $100,000, they're also negative correlated to the stock market, means that in 2008, when the Dow Jones dropped 50%, these diamonds went up 50%. So if you happen to have, let's say, a $100,000 stock portfolio, and you're concerned about the stock market falling, but you don't want to sell your stocks for tax reasons or whatever, a D-flawless white diamond will basically help you hedge your entire stock portfolio. That's how amazing these diamonds are. So again, with everything happening in the world today, you've got the potential of hyperinflation. When you talk about inflation that caused gold to go to $800 in 1980 from $100 and caused silver to go from $1.25 all the way up to $52, colored diamonds in 1980 because of inflation went up 500%. So they're a hedge against inflation. And again, nobody knows that you own them. There's always talk about the government's doing things against us and everything like that. To put away an asset that nobody in the world knows that you own is a huge benefit. Now, the only problem with the diamond market has always been, how in the world do we resell our diamonds? Because if you go to a jeweler and you buy a diamond, let me take you through this, because diamonds come out of the mine as a rough diamond. So the miners sell them to cutters, diamond cutters. And the diamond cutters are going to cut and polish these diamonds. Then they're going to send them to New York to the Gemological Institute of America to be graded. You never buy a diamond that doesn't have a GIA report. And then they go back to the cutter. He's got his own salesman. They sell to dealers, and dealers sell to jewelers. By the time you, the end user, gets this diamond, you paid sometimes 200, 300, 400% more than what you could have. But then again, most people cannot buy diamonds on a wholesale basis. But that's what we do. So basically, we're third-generation miners. We mine our own diamonds. We cut our own diamonds. And then I offer these diamonds to my clients all over the world as investments. Now, the one problem with the diamond market has always been, how do you resell? Because if you go to a jeweler and you buy a diamond ring for $100,000, and then you wear the ring or you do whatever for the next 5, 6 years, and you go back to sell it to the same jeweler, he's not even going to give you back what you paid for it, because that diamond's marked up 300 to 400%. With us, we own our own secondary market. We own 8 Siegel Fine Auctions, the only company of its kind in the world that resells our clients' diamonds. And that's how we make our money. We get 10% of the profit when our clients sell their diamonds at a profit. So we own 8 Siegel Fine Auctions. The next auction is going to be October 21st. It's going to be phenomenal. At our last auction, we had 20 diamonds up for sale, 17 Argyle pinks, 2 Cartier diamond rings that were numbered pieces, and an orange diamond ring, and with 1 hour, every single piece sold to investors all over the world. We can also sell your diamond at auction for example, in London, England, where the British pound is worth 40% more than the U.S. and Canadian dollar. So again, this is my business. This is what I eat, sleep, and drink every single day. I've been on the radio for over 30 years. I've been in the commodity business and in the trading business for many, many years. But the diamond market is a very quiet, very secretive market. And again, it's not for everybody. First of all, the minimum investment is $15,000 to $20,000. And again, you never want to invest all of your assets in one particular market. You want to be diversified. You want to have something in diamonds. You want to have something in gold and silver. You want to keep some cash on hand. Again, I'm very nervous about stocks and paper assets now, so we're not recommending those. But again, diversification is extremely important. Go to our website, rarecoloreddiamonds.com. We've got a learning center. You can see our historical price tracking system. We're going to have a DVD up within a few weeks that will educate you everything on diamonds. We also have our loose diamond section, and we have over $500 million of the rarest diamonds in the world. Again, starting at $15,000, and I actually have one diamond that is worth in the $50 to $60 million range. It's a one-of-a-kind vivid blue. So again, we can help all of our clients, and most of our clients are just hard-working, everyday people that just want a decent return on their money and to be able to protect what they have, and that's what the rare color diamond market will give you.
Harold wrote an article, and it's interesting because it was August the 9th, 2005. So here we are, 8 years later. Naturally fancy colored diamonds, the best kept secret. And he wrote, when a diamond sparkles with brilliance, intense color, it is a gem of great rarity and beauty. These extraordinary gems are also known as fancy colored diamonds. If you did not know that diamonds came in colors, they do and are very rare. Only 1% of diamonds mined are naturally colored diamonds. The 2 most famous diamonds in the world are colored diamonds. The Tiffany diamond is a magnificent fancy yellow, 128.54 carat diamond, and the Hope diamond is a stunning blue. The most expensive diamond per carat weight is a 1 carat red valued at around $22 million. The rarest and most valuable colored diamonds are red, blue, pink, and green. And obviously since then, Harold, yellows have become very, very popular, hot, and deep flawlesses as well. But it's interesting to have this article and read through it because here we are You were the first person to talk about naturally fancy colored diamonds, the best kept secret, and as an investment. On top of it, the prices, how the prices have changed in 8 years. They've just gone absolutely ballistic. So it's fun to go back in time. We transport ourselves back in time, August of 2005, and read a little bit of that article. Harold, it's amazing to me, and I saw it this week, where I was reading a story, and it was about colored diamonds. And a company basically completely ripped off your website. So obviously you'll be in touch with them, and they'll be shut down. But when it comes to dealing with the number one person on the internet, number one website, it's rarecoloreddiamonds.com. The telephone number 1-800-432-1022. Harold has the best diamonds, the best of the best. That is our featured diamond of the week, a .090 carat emerald cut fancy intense pink argyle. That's why Harold was on Bloomberg Television, has been invited back. That's why he had the foresight to start hsfineauctions.com, and we have an auction coming up October 21st, 8 Eastern, 6 Mountain. But Harold, I do congratulate you. Here you are 8 years later, and we read that article, and we see how many people are trying to copycat you. But the truth of the matter is, there's only one Harold Siegel, there's only one Rare Colored Diamonds, and there's only one hsfineauctions.com. And you have the proprietary, and we've talked about this for a long time, price tracker system. You can go to the website, take a look at it, give you an idea of what future potential is for diamonds. And, I give you credit because you're the one who really developed this market. And you don't seem to get credit, but I give you credit on the show because I think it's important for people to understand you were, and we have 3 minutes left in our show here, you were the one who did all of this.
I appreciate it very much, Randy. And again, competition is good, but I really don't feel that we have any competition because I have total control of the yellow flawless market and the argyle pink and the D flawless market. So again, I have no problems with anything in that. All I want to do is have my clients come out of this and do well. And again, as long as I've been in the diamond business, I've never had a client that's ever lost money in diamonds. It doesn't trade on an exchange like gold and silver and commodities and stocks, so you don't have the same buying and selling situation. Diamonds are a much more specific type of investment, and the ones that we're recommending to our clients are affordable, but they have track records. And again, you put your money in the bank and get 1 or 2% return, and there's risk in the bank, and you put your money into a certain diamond, and you're going to get 15 or 20% back or more. That's where some of your money should be.
The truth of the matter is, these low interest rates are going to continue for a long time. Bill Gross from PIMCO came out this week, and he said that they really believe that in the United States they're going to stay at 0.25 basis points for a long, long time, perhaps 2016 and beyond. There is a concern about deflation, and obviously there'll be a new Fed chief come in. It'll either be Larry Summers or Janet Yellen, and the quantitative easing will continue. There are those that believe quantitative easing, they will start tapering in September, but with the economic numbers so mixed, I think they'll err on the side of caution and continue with the quantitative easing of $85 billion a month, buying their own bonds, keeping interest rates down. Harold, that means hard assets will continue to flourish, whether it be gold, silver, platinum, palladium, or diamonds. And we want to thank you for another outstanding show.
Well, thank you very much, Randy. It was great. I wish everybody a wonderful weekend and a very profitable day.
Don't forget Worldwide Precious Metals in Toronto this October. Book a private information session with them, 1-866-623-2002, or sign up online, www.pmc.com. They are the leading Canadian bullion dealers to deal with experts to trust and work with in this very specialized market, recommended by Harold for over 10 years. Connect with them, get the newsletter, start your own precious metals investment account, 1-866-623-2002, www.pmc.com. Connect with Harold at rarecoloreddiamonds.com or call 1-800-432-1022. That's it. Another edition of the World Financial Report on Radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.